It's the end of the week and IREN just closed Friday up $1.11, or 3.38%, at $33.96 per share. That finish caps a lively stretch where we saw the stock rip early in the week, cool off on Thursday with a modest pullback, and then snap back into the green today. The big question heading into the weekend is whether this is just momentum doing momentum things, or whether there's something deeper and more durable about the bid under IREN right now. I want to walk through what changed since our last video, how the tape behaved, what options and short interest are telling us about positioning, and why, despite the day-to-day noise, the long-term thesis still feels as strong as ever. Let's start with the quick chronology. Earlier this week, IREN extended its remarkable run with strong sessions clustered around some very real fundamentals. Record quarterly revenue, a decisive swing into profitability, and continued progress on the dual-engine strategy of Bitcoin mining plus AI cloud. The Nvidia preferred partner status has stayed front and center, because in this market access to GPUs is access to growth. We then hit Thursday, which looked like a breather. The stock slipped 2.3% to close at $32.85 after trading as high as the mid-30s intraday. We talked about that as a healthy pause, profit-taking after a big multi-day move, no new negative catalyst, and some softness across growth and AI-adjacent names. And now Friday. The stock reclaimed ground, finishing at $33.96. Importantly, this wasn't a drift higher on fumes. Volume stayed robust, and the price action looked like the kind of orderly bid you see when buyers are using dips to add. I didn't see a single fresh headline on Friday that would explain a discrete pop, no new contract, no late-day filing, so it reads like follow-through on the same narrative that fueled the earlier rally. That narrative is simple: IREN's fundamentals are inflecting, the AI cloud ramp is real, and institutions are increasingly treating this name as an AI infrastructure play rather than just a cyclical miner. Before I zoom out to that long-term lens, let's talk positioning because it helps explain why green days can get a little extra juice. On the options side, the tenor around IREN has been call-heavy. We've seen unusual options activity headlines in recent weeks flagging outsized call volumes relative to normal traffic. Even when those spikes aren't the same day as a rally, they tell you who's camping out in the order book: traders who want upside convexity and funds who are comfortable paying for it. When a stock with that kind of call skew starts ticking higher late in the week, you can get delta hedging flows from market makers and short-dated momentum buyers piling on, which reinforces the move. It's not the whole story, but it's a useful tailwind. Now add short interest. The latest reads show short interest still meaningful, on the order of the low teens as a percentage of float, with days to cover around a day to a day and a half. It has been easing compared to a month ago, which tells us bears are trimming, but that's still enough fuel to matter. What that means in practice is this: when the stock behaves well, think steady green candles, volume support, no scary headlines. The shorts who are leaning in for a bigger breakdown don't get the follow-through they want. They step aside, lighten up, or cover into strength. That creates incremental demand on top of natural buyers, which is one reason you'll often see late-week closes like today finish toward the highs. Okay, zooming back out. The core of the IREN story hasn't changed, and that's the point. On the mining side, capacity has scaled to roughly 50 exahash per second, which places IREN among the leaders globally. That alone would be enough to make the stock interesting in a favorable Bitcoin environment. But the real upside asymmetry is in the AI cloud pivot. The company has deployed roughly 11,000 Nvidia GPUs, with thousands more slated for delivery, and the preferred partner designation matters because it addresses the single biggest bottleneck in AI right now: supply. It also plugs IREN into Nvidia's commercial ecosystem, which can shorten sales cycles and de-risk utilization. Even in its early innings, the AI cloud line is already high margin. Management has talked about hardware margins in the neighborhood of the high 90s, think 98% on the box, and while the revenue base there is still small today, the target glide path is the real story. If they can scale that to low hundreds of millions annualized as they've outlined, investor math changes quickly. Markets will pay a very different multiple for an asset-heavy miner versus a renewable-powered AI infrastructure platform that throws off high-margin compute revenue. That re-rating is what many of the bulls are leaning into. That brings me back to Eric Jackson's thesis, which has been a helpful frame for a lot of people following this name. Jackson's basic argument is that a sum-of-the-parts view, valuing mining, power, and AI cloud separately, yields a number that's still well ahead of where the stock trades today. His blue sky case sketches out a path that could justify a triple-digit print in the next 18 months and even higher long-term if execution continues. Whether you accept every assumption in that model or not, the shape of the reasoning is important. If the market stops valuing IREN as a single-engine miner and begins valuing it as a multi-segment AI infrastructure company, the ceiling moves. Now, one thing I like to emphasize, especially after Green Fridays, is what didn't happen. We didn't get a surprise downgrade. We didn't get an adverse regulatory item. We didn't get a sorry, deliveries are delayed footnote. We also didn't get frothy, unsustainable price action. Today's tape looked measured. Those non-events matter because they reinforce the idea that Thursday's dip really was a reset rather than a regime change. If you're building a position with a multi-quarter lens, that kind of behavior, fast up, tidy pullback, constructive recapture, looks like strength, not fragility. Let's also hit the leadership piece because it's easy to overlook but crucial for the next leg of growth. The CFO transition to Anthony Lewis is a signal. Scaling GPU clusters, underwriting power commitments, and structuring non-dilutive financing all require a very specific kind of finance muscle, the kind of muscle born in energy and infrastructure. That's exactly the background you want if you're about to stand up multi-hundred megawatt campuses and then sweat those assets with high-utilization AI workloads. Great technology stories often stumble on capital structure. IREN is putting the right operators in the right seats to avoid that trap. Technically, the stock still screens well. Composite scores remain in the mid-90s with A-grade accumulation, which is basically the market's way of saying institutions are buying the dips. I'm watching the low 30s band as first support, call it the 30 to 31 area, and the mid-30s as a zone that, once digested, could open a path to new highs. If we base for a few sessions between those, that's fine. Bases are how big moves are built. If, instead, we break out cleanly on a catalyst, say a meaningful AI customer win, an update on GPU deliveries, or a notable power milestone that would fit the momentum profile we've seen all month. Since we're already thinking like operators, here's what I'm watching into next week. First, any incremental detail on the AI cloud bookings, utilization, or early logos. Those are the kinds of proof points that move this from great story to great business. Second, the cadence of GPU arrivals and how quickly they're brought online. Every server you energize not only adds capacity but also compounds the learning curve of running these clusters efficiently. Third, the monthly operational updates, mining volumes, energy costs, curtailment behavior, because the cash flow from mining is the fuel that helps finance the AI build. Finally, the positioning prints, short interest updates and options skew. If short interest grinds lower while price grinds higher and calls remain the weapon of choice, that's a friendly backdrop. Now, how does Friday's close at 33.96 relate to the narrative we've been crafting across these videos? In episode 1 we laid out the superstructure, dual engines, Nvidia partner status, big power ambitions, nearly 3 gigawatts secured across operational, under construction, and development buckets, and a clear plan to re-rate the business. In episode 2, the Wednesday aftermarket, we showed how the tape was starting to reflect that story, heavy volume, constructive technicals, and institutions pressing their advantage. In episode 3, the Thursday aftermarket, we argue the pullback looked like a reset rather than a reversal, profit taking into a stretch chart, no thesis damage. Today is episode 4, confirmation. The stock absorbed selling, respected support, and advanced into the weekend on solid footing. If you've been following my coverage of Eric Jackson's work, especially around Open Door, you'll recognize the through line. Jackson's edge is spotting narrative dislocations, companies that the market is still valuing for what they were, not what they're becoming. With Open Door, it was iBuyer doomed morphing into data-driven marketplace operator. With IREN, it's Bitcoin miner morphing into renewables-backed AI infrastructure. Not every morph works, but when the ingredients line up, real assets, real cash flow, advantaged supply, credible leadership, you get these windows where price can sprint to catch up to reality. I think we're still in that window. To wrap this up, here's the takeaway heading into next week. IREN ends the week on the front foot at 33.96 after a brief reset, with options positioning and lingering short interest providing a friendly wind at its back. There was no single new catalyst on Friday, and that's okay, because nothing broke, either. The big rocks haven't moved, record revenue, a profit inflection, 50 exahash scale in mining, a credible path to scaled AI cloud with Nvidia, and financing stewardship designed for large, power-hungry build-outs. If new AI bookings or GPU onlining milestones hit the tape, the stock has a setup to respond. If we simply base and let fundamentals compound, that's healthy too. As always, I'll keep tracking the positioning data, the monthly ops updates, and any signs of acceleration in AI demand. For now, I remain bullish. The thesis we laid out on day one is intact, the confirmation we wanted showed up this week, and the market is increasingly valuing IREN for what it's building rather than what it used to be. That's the kind of shift that can power a story for quarters, not days, and it's why I'll be right back here with the next update when the headlines hit.